Diversified miner Exxaro's first half headline earnings per share up 11% to R11.62. That's as a weaker relative local currency was realised and low volumes were offset by slightly higher mineral sands prices. South Africa's second largest coal producer's revenue increased marginally by 3% to 9.7 billion. Exxaro expects overall coal production volumes to be higher in the second half of the year. Exxaro's share closed down over 2% to 165 Rand. For more, the company's CEO, Sipho Nkosi, joins us in studio. Thanks very much for joining us live here on Business Tonight. I know you're not happy about that share price and you feel that it should have gone the other direction.
Indeed.
Tell us why investors have got it wrong, Mr. Nkosi.
They love money, and I think it's important that they get the contribution. I think there are, the expectation was quite high on the dividend side. Last year,
you gave them too much last year.
We gave them 5, and But if you look at the first half of last year, we gave them 3, and this time we gave them 3.5, which shows some progression and growth. But probably the other one is the general outlook for the commodities business in the second half. I don't think it's quite that rosy as we all expect. The pigment business, we think it's going to be slightly flat. The coal business, I think, will do well, particularly the domestic business, and the export business will do well. The prices, of course, have come off, as we've pointed out. The mineral sands, the feedstock side, I think will do well. Chris Griffiths on Kumba iron ore.
We're going to take this piece by piece. So I know Mark has been doing a lot of research, and he was saying off air a moment ago, a good set of results. So you've definitely got him on your side.
Absolutely.
I know that you are jumping at the bit to get in there with your line of questioning. You always come in with those numbers, and I can see you've done all your analysis.
Well, we're not going to get too into the nitty-gritty detail type stuff over here, but I think a quality result actually on the whole in the environment. I was particularly interested in the Tronox deal that you did recently, in fact, and I was, just thinking to myself, perhaps, you've got a few assets now where you've got meaningful investment stakes, but not essentially management in close quote stakes. Is this perhaps a function of you releasing management time and resources to focus on what you really want to focus on?
No, I think we want to continue being a diversified organization, and that's our stated strategy. But there are things that we have to do in life to achieve that one. So I think we consider this one as a step towards leading us towards that. Important thing is that mineral sands or pigment business is one of the strong legs of Exxaro.
Right.
We decided to create an integrated business because we believe that business is more defensive than you having your feedstock and the other one having their pigment business. We think that business is very good, and that's why we have this big integrated business. Of course, the feedstock business right now is making a huge contribution as opposed to the pigment side of the business. But as far as our strategy is concerned, we want to continue being a diversified. Coal is one asset that we are managing. Iron ore, as you know, we're building a project now in Mayoko in ROC. That's going to be another one that we're going to be developing up to 10 million tons by 2016.
And 7 billion into too. That's a significant
well, that one, I mean, we've done 9.5 billion rands of investment in that one.
We need to pause on that note. Now, with that capital investment, there are problems with, from an Eskom's perspective, on the boiler front. I don't know the nitty-gritty of the deal, but that seems to be delaying certain aspects. You, for the 2012 year, will supply 160,000 tons of coal. That capacity can go up to about 14.6 million tons. Is that correct?
The contract talks to 14.6 million tons, but you're looking at all units. You're not looking at one unit. The way this thing is going to be developed towards the end of the last quarter of next year, unit number 6 will come in, and then 5, 3, 4 until you get to 1. And I think around 2016, 2017, all units will be fully functional at the time. And then you will realize the 14.6 million tons.
Are you renegotiating that deal with Eskom as it stands?
Obviously, we've had some interaction with them because we were ready to deliver the coal today or this month to them, but they had some challenges on the boiler side. And we had to look at ways of ensuring that Exxaro continues not to be prejudiced as a result of the delay that happened on the other side of the fence. And I think we've achieved that.
Another issue that we need to address is obviously the regulation when it comes to the exporting of coal. And if you can unpack that story for us, because as far as I understand it, and it recently came to light, that there are two different types of coal, and the coal that you are actually exporting is a completely different grade to that you supply locally. So by exporting that coal, you are not in any way having a negative effect on your local coal supply. Would that be the correct understanding?
That is the correct understanding. However, the argument could be extended in saying, in order to achieve that high quality coal, you have to wash it first. So if you were not washing that coal and just flooding it to Eskom, you didn't have to export. But there are other things that you need to consider. If you were to stop exports, that has a material impact on the revenues coming to the country, to the fiscus, and the taxes that you get out of it. So you are supporting one leg, and yet the other one you're affecting or impacting negatively. But also, if we look at an argument which says you must supply the local industry. Let's say we use the steel business as an example. We give coal to the steel mill at a discount. There's nothing which explains to us that when that steel mill is producing steel, they're going to deliver that one to the populace at a discount. And those are things that need to be clarified, because you can't prejudice one and not the other.
Are you expecting to get clarity on that front anytime soon?
We really are. Probably towards Mangaung, we think we'll get some clarity. But the good thing is that the industry is going to continue through the Chamber of Mines, engaging with the ruling party and see how we could assist one another on this front.
Just quickly from our point of view, I think it was a good set of results. I think the market kind of did call it quite correctly, in that your price, if you look at how you've traded relative to the other commodity counters, particularly the precious metals and the general miners, you've held up much better. I think what the market is concerned about is not so much this set of results, but the next set, your outlook. By your own admission, zircon, rutile, the pigment businesses, the prices do seem to be coming up quite a bit, and exports do seem to be lagging. I mean, from the numbers, from my point of view, coal definitely disappointed a bit. Going forward, do you think that that's going to reverse in the second half, or do you think it's going to get? I mean, is the trend still quite negative, or?
If you looked at the graph that we were presenting, you will see that even with the volumes that have gone down on the feedstock side, which is the business that we're managing, the prices held off quite nicely. They didn't come off. But on the pigment side, which becomes an integrated business, that's where the prices were off. And I'll take the point there that the outlook, I mean, we are in that commodity space. We're affected like any other commodity, really.
Just on Mark's point there,
I think it's a very important point.
You've got a $20 billion target, I think. So is that for market cap? If
market cap, yes.
So that would be, as a rule of thumb, about 3 times where you are currently. Yeah. You've got a terrific balance sheet that's got precious little gearing on a net basis. Does that indicate that we could look at a combination of both debt and perhaps fresh equity with a view to you acquiring assets and maybe growing your current assets?
Well, we've got quite a lot of projects right now that we've got to bring to fruition. I think that's very critical. We need to spend more time and money making sure that Medupi produces up to 14.6 million tons, because that has quite a lot of uplift in our business. We need to make sure that the Mayoko project in Congo does well. Quite a lot of projects on the market coke, projects at Tabametsi, one of the big operations that we want to develop in the country, and Maramba in Australia, insofar as the hard coking coal is concerned. All those, you have to look at them. And we believe that the sums that we've done, that if we work hard on these and ensure that they start producing at the maximum level, and if the market would behave, we will get to that number.
Okay. I want to go back to Mark's point that by your own admission, the second half is going to be a tough one. Can you perhaps just reiterate how tough you're expecting it to be, taking into account, as you're saying, you're expecting lower export prices on coal. Domestic prices are going to possibly be a little bit more robust, but aren't going to shoot the lights out, also on the coal side.
And iron ore is also,
and iron ore also under pressure. So perhaps a little more colour on how bad it's actually going to get.
Well, it's not going to be bad, but it's not going to be a very rosy picture that we are painting. If you look at the export coal that we deliver, we'll continue exporting the coal. But mind you, the coal prices have come off from 120, say, to $85 a ton. That's significant.
Is that a flaw, though, on the export prices?
I'm talking for now. We don't know. We don't know, really. No one knows. No one can come up with a number and say the world is stable now. I mean, we've just seen the numbers coming out of China. They're just telling us that the world is a bit sick right now. So we've got to consider that one. So I really can't put my head on the block and say, this is the flaw. The same can be said on the Eskom side, which is a very good business. We just think that for as long as we produce volume, that will continue giving us good returns. That's stable. The prices are not going to be affected. The export side will. Insofar as other domestic markets like ArcelorMittal, we are going to be affected because that business is also impacted one way or the other. So we've got to consider that one. We can't run away from that fact. Insofar as pigment business is concerned, Tom Casey made a point that, you know what, it's going to be just pedestrian going down at this time around. So the situation is not that bright, but we can survive, I suppose.